Okay, folks, welcome to Best Stock Charts for the coming week. We're going to talk about our trades from last week. How did we do? Why are you listening to me? We did awesome. We had a great week. We're going to talk about the charts we're watching for the new trading week. But before we talk about the charts that we are looking to trade in the new trading week, I want to talk to you about our sponsor. And we are proud to be sponsored by TrendSpider, Automated Technical Analysis, one of the best charting software out there. And the reason why it's different from other charting software is because it uses algorithms to help identify support and resistance levels, multi-time frame analysis. What does that mean? Well, if you have a support level on a weekly chart, wouldn't it help to be able to overlay that weekly chart on top of a daily chart? When I saw that the first time off, when I reviewed the product, I said, wow, you guys get it. You totally get it. That you need to have multi-time frame analysis incorporated into your trading software. So automate your grunt work, speed up your technical analysis, and improve your accuracy and reduce costly analytical mistakes. How do you do that? Well, one, you use their scanner to find top-notch trades. Two, you use their alert software. Why does that matter? Well, if you're using a rules-based approach, if this, then that, what does that mean? You pull back to retest a support level, you have an alert that fires off, well, you can begin opening up or building your position. If you have another alert that's set above the share price and the shares break out above your alert that's set at a resistance level and the shares close there, well then, that's your cue to either A, add more to your position, or B, open up a position. So take advantage of it. 7-day free trial offer. I believe in it so much that I give it away free to our silver and gold levels members to the Contrarian Trader. So use the link below. They're giving an Easter sale. I get a 35% discount code as well. So use the link below. Check out their product, 7-day free trial offer with them, 14 days with me, and explore the product. They have scanning, charting, raindrop charts. That's their own. You're not going to find this anywhere else. Raindrop charts, back testing, unusual options activity. These are all new. Alerts. They've added so much here. They don't even put on a new tile. They're just stacking them up here to the right. Social media chatter. So, folks, take advantage of it. Great platform. TrendSpider. Let's get to our trades for last week. We did very, very well. What we do here is that we love earnings season. Earnings season is like Christmas 4 times a year. So what we do is that we sell options. We do not buy the options. You do not want to buy options into earnings. Why? Because they're very expensive. So what we like to do is we take advantage of the expensive options and we say, okay, where's a good risk reward level at which to sell these options? Meaning we are the casino and not the gambler. So we sold options on, these are earnings trades, Goldman Sachs. Great trade here. We made 100% on, oh no, actually no, 55% on Goldman Sachs. BlackRock, these options expired worthless. So we made 100% on this trade. Other non-earnings trades that we put on last week, Microsoft. We did very well here, made 100%. Tesla, 100% on this trade. Looks like Tesla's going to break down. And the last earnings trades that we did last week, actually, no, it wasn't an earnings trade. It was a non-earnings trade, AMAT. The options were very expensive despite the fact that there's no earnings for last week or this week. So we sold a Strangle. Again, a Strangle is when you sell simultaneously a deep out of the money call and a deep out of the money put. Same expiration date, but the probability of profit is very high. I usually like to use 86% probability of profit. So we executed on that trade. It did very, very well. and those expired worthless. That's good for us, bad for the option buyer. That's why we sell premium. So let's talk about some stocks that we're looking at for the new trading week. Okay, so earnings trades coming out next week. We have on Tuesday, Netflix. IBM will price out, but we may not trade that one because the options aren't that expensive. Tesla. ASML, that's a maybe. I priced them out last quarter. I didn't get a lot of premium on that, so I avoided it. We will look to trade potentially Dow Chemical. They appeared on our screener. The chemical stocks may be taking off soon, so pay attention to the chemical stocks. And on Friday, we may trade American Express and perhaps Schlumberger. So these are the trades that we're looking to put on this coming week as earnings trades. So what equity trades are we looking to put on? Let's talk about it using TrendSpider. First up was my list. First up, BP. Okay, British Petroleum, weekly chart. We're going to begin with a weekly chart because we want to identify where the stock has been, to identify where it may be going. In fact, with BP, I'm going to go to a monthly chart first to give you that higher level view. And there you have it. This is a beautiful, beautiful base that BP is ready to break out from. And in fact, on a monthly time frame, it's already beginning to break out. So the month is still early, but it appears as though we do have a breakout on BP. Take note of your higher lows. Nothing not to like here. This is a good looking stock. Now, moving down to a weekly chart. The weekly chart, here's your breakout as reflected on the monthly chart, but now represented on a weekly chart. We had a breakout several weeks ago. We've been consolidating gains last week, continuation move up higher. BP looking very, very strong into the new trading week. The however is this, is that you want to know where you have support and resistance below. This is where the magic occurs with TrendSpider. Click this button, trend lines right here. Watch. Bam. So you can see that we were bouncing along these lower bands of two support levels, one in blue, the other in green. The ones in dash line, those are the ones I drew. So you could see that we, again, broke out. So where do we want to concern ourselves with at resistance? Well, right up here. So if we buy BP on a new weekly higher high, we need to know where we have resistance above. So what I'm going to do here, I'm going to create an alert. Touch, bounce, keep a little bit of sensitivity, not much. And note to self, we're going to book profits as a swing trade. And there we have it. So we know if we get a continuation move up higher on BP and we make a few dollars, well, if we want to book profits, we don't have to, but if we want to book profits, well, then we can book those profits up at resistance, wait for a pullback, then buy back in. RSI looking very, very strong. Daily view. Daily view, you can see, again, the magic of the automated trend lines. Here you could see support below in blue, resistance above in red. I want to know when we break through. And I don't care where we trade intraday. What matters is where we close. Now, what I'm going to show you on this chart is how we overlay weekly support and resistance levels onto a daily chart. Very powerful functionality. Bam, and there you have it. In dashed line, on a daily chart, I now have weekly support and resistance levels. I don't need to go skipping from chart to chart to chart, meaning daily chart, weekly chart, the monthly chart. I have it all right here. If I want to take a look at if I have monthly support and resistance levels above or below, well, all I need to do is do this. Take weekly off, click on monthly, and there you have it. This is critical data to have. If you're trading not knowing where your support and resistance levels are at, well, you're walking around like a blind man without a cane. So it's critical that you are using this type of functionality. If you're not using it, you're missing an arrow in your quiver. Again, 35% discount code below. Use the link. Head on over. It's a free trial. Test it out. Next chart up, Dow. Dow Chemical. They're reporting next Thursday. So keep that in mind. We're going to be trading the options here, selling options. But after earnings, when we take profits, ideally we take profits, off the table on Dow Chemical, I'm going to look to see whether or not we have a setup for a long trade. Why? It's not the daily chart that has me excited. In fact, I don't even like the daily chart. We're up and into resistance. Again, we're going to take the automated trend lines off. This is not where you want to buy the stock. You'd be buying it into a resistance level. We want to take a step back. First, we don't buy ever. We never buy a stock into earnings. When I hear a person on the financial news media come on with their slick back hair, fancy suit, telling you to go buy a stock immediately before earnings, that is unconscionable. That is nefarious behavior. Do not listen to that individual. They know not from which they speak, or they are incompetent and corrupt. So please be very, very careful. Way too much risk. So I'll wait until after earnings. We could do it on Friday. So what we want to know is the macro view. Just like we did with BP, where has this stock been? Is it sending us a signal? You're darn tootin' it is. It's telling us it's a screaming buy. We bottomed out back here, March 2020. Rally, multi-month consolidation. What did we do? We have broken out. Now we're setting up for a continuation breakout pattern. This is sexy stuff. So I know you may be thinking, why not buy the options right now? Maybe the leaps going out a year. Don't do it. They're too expensive. Trust me, what the traders are doing right now, there's a lot of demand for these options because they want to trade options on Dow Chemical into earnings. They want to speculate. Those options are too expensive. Wait until Friday. Wait until next Monday if you want to buy leaps on Dow Chemical. You'll have what you call IV crush. The value of the options will collapse after earnings. Even if they beat on earnings, the value of the options are going to collapse. You wait until after earnings, then you buy the options. So a monthly chart of Dow Chemical looking rock solid. Let's throw up our automated trend lines, see if they're sending us a signal. Nope, we have a monthly support below, not much happening above. That's clear blue skies. That may change on a weekly chart. Let's go to it. Weekly chart, beautiful outside reversal bar last week. This is setting up for a move up higher. Loving the setup here. Weekly overlays of support and resistance. Support way down below, not much in terms of resistance above. I'm loving the setup, daily chart. All right, so we already did the daily chart earlier. We knew there was resistance above. I can't be a buyer until we break out and close above this upper band of resistance here. Now, you may be saying, what if on earnings Dow Chemical gaps up? It just may. There's a good possibility that it may. But that's speculation, right? There's healthy speculation and there's unhealthy speculation. Buying a stock into earnings is unhealthy speculation. Sometimes you'll get lucky, sometimes you won't. 50% chance, it's not good enough. I want better risks or better odds than that. So what we'll do here is create an alert letting us know that we have a breakout on Dow Chemical. But what if it breaks out on earnings? Do I chase it if it gaps up? No. What we'll do is we'll wait for a retracement back down to the support level, which was and is resistance now. It should then become support. So that's why I included not just a breakout, but I want to anticipate if we gap up higher, a pullback and a touch and or a bounce off of that would be now a potential support level, currently resistance, if that makes sense. If it doesn't, leave a comment below and like the video, please. Subscribe to my channel, please. It helps me out a lot with the YouTube algorithm. So we're good here. The next chart up, I want to take you back to where we are at cyclically, okay? We are here. We are in what I believe to be a bear market. A bear market, not in everything, but certainly in growth stocks. So right now, where you want to be is up here. Staples, energy, healthcare. Utilities are doing well. They're a little bit extended. Finance, not yet, but soon. They'll be on the horizon. But right here, We are in an area of where the full recovery is gone, way gone. We are in a downtrend now. We are entering the mid stage of a bear market, and I believe that we're already in a recession. So we are rolling over here. We don't want to touch growth, which is technology. We still love basic materials because of inflation. So if I like staples, what else do I like? People are sad. They're not happy. What do they want? A beer. Molson Coors. Molson Coors is ripping. Here's your monthly chart. What do you pick out right away? A couple of things. One, higher lows. Two, breakout out of this triangle formation. Three, a continuation breakout for the third sequential week of a bullish key reversal. If you're not familiar with what a bullish key reversal is, I have a 5-part video tutorial, link below, free. My top 5 favorite candlestick patterns. Check it out. So I'm expecting here a continuation breakout on tap. I don't know when the earnings are, so know that in advance. Drilling down to actually, before we leave the monthly chart, let's overlay the automated trend lines. Look at this. Look at the breakout here so far on the month. We have broken out above resistance. This is a serious breakout on tap, weekly chart. This is probably coinciding. I'm going to overlay the monthly support and resistance levels. Now, we have 2 resistance levels we broke out of last week. Here's the monthly resistance level in dash line. In solid is another weekly resistance level. So what I want to know this coming week, do we retest support? If we do, I want to be a buyer. Now, what I also want to know is this, is after I enter the position, where do I have resistance? Well, right up here, right at 61.35. So I'm going to create an alert up there. In advance of me even buying the stock, I want to know when I'm getting out. Or at least booking some profits, wait for a pullback, and then buying back in. Just a swing trading mentality. We'll keep a little bit of sensitivity on. Book profits. And there you have it. So we're good to go here. So this is what I mean about when I say rules-based approach. If this, then that. When will I buy the stock? On a pullback and a retrace of support. I'll enter the position. Then I'll look to potentially scale out of the trade should we hit this upper band of resistance. Not a guarantee, but it's an option. I want to know when we hit resistance. So the RSI looking rock solid. Higher lows, higher high. Great week last week. And think about it. We had a weak market, yet tap outperformed. Relative strength. Why? Going back to the market cycles. Staples are doing well. What else did we go over? BP, energy, chemicals, right? You could mix that in with energy. That's a byproduct of energy. So these names are performing well. Notice I'm not talking about the ARK fund. I'm not talking about Tesla. I'm not talking about Microsoft. It's not time for those stocks right now. It will be, but not right now. We want to go with what's working, and these names are working. With that, folks, everybody have a profitable trading week. Enjoy your Easter. Happy Easter. Enjoy the time with your family. Don't forget, 7-day free trial offer, TrendSpider. I give it away free, 14-day free trial offer, and you get it free with silver and gold level memberships. Join our Slack forum. If you do join up, you should get a link to our Slack forum. If you don't get it, email me, and I'll get it out to you right away. Till next week, everybody have a profitable trading week. Be well. Oh, it's Sunday Night Futures Live tomorrow night, 6 p.m. Eastern Standard Time. See you then.